Why are we seeing Bumble struggle here?
Hi, Emily. Thanks for having me. I guess the one of the biggest reasons why Bumble is trading off today is because expectations were building into the print. If we think about our internet coverage universe, Bumble stock has been one of the best performing names year to date in a market that's tough, in a stock market that's tough, driven by macro. And so as we were heading into the print, expectations were for a strong quarter and a strong guide, and it's just giving back some of that. Fundamentally, however, we don't think much has changed. The guide is a little bit lower, but a lot of it is because of FX, and they should probably get a pass on that. Consumer demand is holding up. It seems like they are largely resilient, and a little bit of a lower guide is because of some product changes that they are pushing off until 2023.
Bumble is unique in that it has this other dating app, Badoo, which is acquired in Europe, which is also under pressure. And then, of course, there's the competition from Match and Tinder. What are the biggest challenges from these competing players?
Well, the best comp for Bumble, I think, is Hinge in terms of the demographics and the overlap across the user base that they have. What came out during the earnings call that Whitney, their CEO, mentioned was that Bumble remains the #1 downloaded app in their major markets in the U.S., in Canada, and in the U.K. And as of July, also in Germany, where Tinder has very large presence. So what that tells us is that they're executing pretty well to the degree that now they are the most downloaded app, implying market share gains across their major markets. And so as we look what is ahead, we would compare Hinge and how that is trending in newer markets, which is also what they're trying to do in international non-English speaking markets, versus Bumble. And that's going to be the race. So far, Bumble is doing fairly well. Hinge is expected to be a $300 million business, growing 50%. Bumble is about $1 billion in business, although that does include a little bit of Badoo. So it is a little bit of a bigger scale, growing over 30% in year-over-year growth rate, and they are also executing well.
A couple other companies you cover, I want to talk to you about Etsy first, reporting better than expected results a couple of weeks ago, despite this difficult macro environment. Why does Etsy seem to be bucking the trend?
Etsy is very unique in a lot of ways, not only in the type of items that they sell, less commoditized, the things that you may not necessarily have a direct comparison with. You can go to Amazon and find the same item elsewhere, but that's not so much the case with Etsy. And so what is really helping Etsy is that they have a very sticky seller base, a seller base that doesn't sell necessarily on Amazon or eBay as much as craft fairs. And these are 5 employees or lower sellers who are doing it as a side job, but have very talented skills. On the buy side, they have very sticky buyer base in terms of the retention and the people that come over and over again on Etsy, driving a purchase frequency. And so as that becomes more habitual, that's what's sustaining Etsy. The key question for them going forward is, in a macro environment where consumer spend is shifting away from discretionary physical goods into discretionary, but travel and services, what happens to Etsy's overall growth rate, and why would they have the right to win?
And finally, Peloton earnings coming up in a few days. The rivalry between Peloton and SoulCycle has, some call it desperate. It's certainly entertaining, but they're doing a lot of different things to try to get riders and exercisers back. What's your take on Peloton under its new leadership and its chances for a real turnaround?
Well, I have confidence in Barry, the new CEO. The challenge right now that Peloton is facing is it seems like they have a lot of fires to put out. Competition is one, but internally and operationally, they have the biggest challenge they have is the inventory drawdown, which is they have a lot of inventory that they need to sell. They may have overproduced, and they have cash issues, which means that they have to show positive free cash flow by the end of that next year. And so while there is competition, the biggest thing is going to be execution. I have confidence in Barry. The challenge is I'm not sure how deep their bench is.